Have I got an exciting topic for you guys this week? This is going to be so awesome. We're talking mortgages. Let's get into it. Hey guys, how you doing? Derek here from Simply Home. We are one of the fastest growing real estate companies in the entire United States, and I've got an all-star team right here in Ferndale, Michigan. So whether you're looking to buy, sell, invest, rent, whatever you need, we've got you covered. So we've been talking about this for a couple months now actually at this point, but the Fed finally lowered their rates. Mortgage rates have come way down from where they were a year ago. Got a lot more people looking to purchase and refinance and all that good stuff. So I figured this was the perfect time to kind of walk you through the mortgage process, let you know what to expect if you're looking to, whether you're looking to purchase or refinance. Most of these pointers are going to be the same. So let's talk about it so you know, like I said, what to expect, and that way you can navigate the process easily and have a little bit better experience while you're doing it. So the process is going to be pretty much the same whether you're looking to purchase or refinance. And if you're one of those lucky people who bought or refied back when rates were like in the 2s and 3s, you get a week off. You're not going to want to hear what I have to say because anything I tell you right now is going to cost you more money. So unless you're looking to buy a new home, in that case, definitely watch. But if you're happy with where you're at with the rate that you're at right now, you're good. We're never going to see rates that low again, I don't think. So for the rest of us here, this is going to be pretty pertinent information. But like I said, the process is pretty much the same whether you're looking to buy or refi, except if you're looking to purchase a new home, this is like step one of the process. This is before you reach out to an agent, before you go on realtor.com or ideally simplyhome.com to start looking at properties. You're going to want to have that pre-approval in place or at least have the ball rolling, simply because you don't really know what your purchasing power is until you've made that step. I mean, we have a pretty good idea, but there's so many variables that go into it as a new buyer that you just want to get this part of the process out of the way, because certain buyers that where if a certain type of mortgage is the best fit for you, there might be properties that won't qualify for that type of mortgage, and that's the kind of thing that we want to know ahead of time so you don't have your heart set on a property that you can't buy. So everything I'm going to tell you is pretty much this is the process for the mortgage company that we're I'm partnered up with, for my loan officer partner. This is the process, but it pretty much is going to be across the board no matter who you talk to for a mortgage, no matter what company you go to. The process is more or less the same nowadays. This is, if you haven't gotten a mortgage in 10 or 15 or 20 years, this is probably going to be really foreign to you. The last mortgage I got on a new home was 2005, and this is completely different from that process now. But nowadays, everybody's going to have like a link to click on. There's going to be a secure portal where you just upload your docs to. So the days of sitting down with your loan officer and handing them docs and having them make copies, those days are long gone. Everything's just uploaded now. It is a secure portal. At least every lender that I have worked with recently, I mean, this is not something where your confidential information is going to ever be in jeopardy, your personal info. The guidelines that these mortgage companies are so regulated now. There's so many guidelines that they have to adhere to, and it's to protect your private information. So I wouldn't sweat uploading things to a portal. I mean, it's going to be secure. You don't really have anything to worry about. But the first thing they're going to ask for when you do that is your personal info, your contact information, phone number, current address. You're probably going to they're going to have you upload a photo of your driver's license, maybe the front and back. A lot of times it's just the front. But you're going to want to give them they're going to need your social security number, they're going to need your date of birth, and all this is so they can order a credit report for you. And then once all that has been uploaded, then comes the kind of cumbersome part. So this is why I'm making this video, so you can be ready for it. You can have everything ready to go before you apply for that mortgage or to refi or purchase. So they're going to need financial docs, like basically they can't just take your somebody's word for it. No matter how high your credit score is, you could have 830 credit score and still lie about how much money you make. So you need to have all that supporting documentation so that they can qualify you appropriately. And what that means is like the last 2 years of W-2s, or if you're self-employed like me, 1099s, you're going to upload those. You're going to need to upload typically 2 months of bank statements. They're going to want to see 2 months worth of pay stubs, or in my case, it was like the last 2 transactions that I did, like the commission forms, things like that, if you're self-employed again, because not everybody's going to have regular pay stubs. And then for any retirement accounts, pensions, IRAs, 401ks, the whole 9 yards, you're going to want at least one quarterly statement from your retirement accounts. They might require 2, but usually 1 is fine. And that's just to determine what the balance is, and if you're collecting on those, how much you get dispersed every month. And that's step number 1. That's usually the most labor-intensive part of the process for you, the borrower. But that's how we're going to determine how much money you make, what you qualify for. Again, there's a ton of variables that go into it, but it's a combination of your credit score, your income, how much reserves you have in the bank, and then your monthly, your outstanding debts. So the other thing that you're going to need to let them know is, what is your house payment? If you currently have a mortgage, what's your monthly payment? You're probably going to have to upload your mortgage statements. You're going to want to, any car payments that you have, any other, credit cards, things like that. Like, what are your monthly payment, what the outstanding balance is, because debt to income ratio is definitely an important factor in getting a mortgage or in refinancing. I believe, every lender has a little bit different, levels that you have to be at, but generally speaking, the lower the debt to income ratio is, the better off you are. If you make a ton of money and don't have any debt, you're going to be loving life. If you have, 6 credit cards and 2 mortgage payments, or 2 car payments and a mortgage payment and maybe a second mortgage, and your income is only at a certain level, it's going to be a little trickier to get you qualified. So that's why they need all that information up front, so they can really figure out which program is going to benefit you the most. And in addition to that, a lot of that determines what interest rate you're going to be paying as well for your purchase or your refinance. So again, very important to just have everything ready, just be able to upload it all at once and call it a day. A lot of these portals now, you can just drag and drop. You can, you don't necessarily have to click find the file and upload it, but you're going to want to have everything uploaded to a hard drive somewhere. If you are, say, like my parents, who I am working with right now to on a mortgage to get a new mortgage for a new home, if they're technologically challenged, maybe your agent can help out, and that's what I've had to do. Just kind of get what they need, take it back to the office here, scan it through, and upload it for them. And obviously, I'll do that for any client. I understand that. You don't necessarily want your agent having all your financial information. So I totally get that, but just be ready to have somebody that knows how to upload those docs, do it for you, that you trust, because that's really the way it's going to be done nowadays. And I should say this too: bank statements, the more any quarterly statements for IRAs, things like that. They're going to need every single page of the statement. So don't think you can just get away with, oh, here's the first page of it. It shows, what the balance is, what the payment is. They want it all. So just be ready to just upload everything at once. Good rule of thumb is too much information is just enough. There's no such thing as over providing info for them, but there's definitely such a thing as under providing. And generally speaking, if you do that, they're going to call you and say, hey, we need the whole thing anyway. So just do yourself a favor, upload all of it at the beginning, and it's going to make the process go a lot smoother. So good stuff. Once we have that in hand and everything's been uploaded and we're good to go, now The next thing the loan officer is going to do is send you a loan disclosure, and that's going to outline. It's going to have the preliminary interest rate. It's going to have the preliminary cash to close. It's going to have your preliminary monthly payment. A lot of that information is going to be estimated, but it's going to be estimated on the high side. So that initial disclosure, you might get sticker shock when you see it at first, but that is everything is going to go down from that point. If anything goes up at all, they have to redisclose it, the whole 9 yards, start the process over again. So generally speaking, your actual cash to close and your monthly payment and your interest rate hopefully are going to be lower than what they give you on that initial disclosure, but it should never ever be higher. So once you've signed that disclosure, the next step is it goes to underwriting, where our mortgage processors like pre-underwrite the files so that when they go out, typically that underwriter is going to just like approve it and be good to go. Like, it is very, very, very common for us to have one-day approvals on loans. I mean, the file goes in super clean. The underwriter just reviews it, verifies it, boom, we're done. Now, if there are items that they need more clarification on, or they need just like more documentation, that's the thing you have to be ready for as a buyer, or somebody that's looking to refinance. They're going to come back and say, hey, I need maybe they need another month of bank statements, or maybe it's the new month of bank statements just came out, so you have to upload the new one. Just be ready for stuff like that. Super common. And the faster you get that back and uploaded, like if they say they need, like if you have the ability to just get it to them immediately, do it. Don't wait till tonight and I'll get to it, and then or in the morning I'll get, like, every minute that you don't have this uploaded is a minute that you can't close. So just, again, rule of thumb, while you're in the mortgage process, if they need something, just get it to them right now. And that way it's all it's doing is you're helping yourself when you do that. And then once that's all finalized and the underwriter's satisfied with everything, you're going to get the conditional mortgage approval. There's one other step at that point for almost everybody, and that's the appraisal. So let's talk about that for a minute. I don't think anybody's going to be, I think almost everybody pretty much knows what an appraisal is at this point, but that is, a state licensed appraiser. And it's not easy to get your appraisal license. You have to do like 10,000 hours of apprenticeship. I mean, it's pretty hard to get that license, but and it might not be 10,000 hours. I think it is, though. It's a lot. It's a long time. It takes a while to get it. But once you have that, that's who's going to come out and say you're buying a house for $300,000. The bank's not just going to take us as agents' word for it, and the lender, and even if everybody in the whole transaction agrees this house is worth $300,000, bank doesn't care. They want an appraiser to tell them that it's worth $300,000 as well. And as agents, that's usually the most nerve-wracking part of the whole process, because we don't have any control over who the appraiser is that goes out to the house, and some of these lenders will, not naming any names, but they'll get an appraiser from Grand Rapids to come and do 10 appraisals in Macomb County. That person has no in-depth knowledge of the market in Macomb County. So sometimes you can get appraisals that are all over the place, even though they're licensed to appraise anywhere in the state of Michigan. I look at it as this. I'm licensed to sell any house in the state of Michigan. But if you wanted me to, get a market value for an industrial site in the Upper Peninsula, I'd have no frame of reference to do that. I have no idea how to value that kind of property. I can basically take a look at any house in Ferndale or Hazel Park and tell you what it's worth, but that's because I'm on the ground in these communities every single day looking at homes, working with clients. So it's kind of the same concept. So, ideally, if you have a lender who uses local appraisers, the more local you are, the better off you are, in my experience. That's the route we want to go. I always take things a step further too, and kind of not hedge bets, but just make life easier for everybody to help the transaction along. And I'll always put my own comps inside the house when the appraiser is going to be there, which accomplishes a couple different things. Number one, gives them the comps for the house that I want them to use to support the value. But number two, it also is a subtle threat, maybe a little bit. It just basically, I'm telling them, hey, if you come in low on this appraisal, I'm going to dispute it. I'm going to use these comps to dispute it, and I'm going to cause an extra 10 or 15 hours worth of work for you that you're not going to get paid for. So just give me my value and let's go on our separate ways and be happy. And most of the time that works. So, usually when it's not as common anymore, it's some, low appraisal issues are one of those weird things that they'll pop up for a little while and then go away. And right now we're not running into too many low appraisals, but when we do, that's the process. We dispute it. We say, hey, we think these comps are more suitable to the appraisal than the ones that the appraiser used, and here's why. And a comp is just a similar home that has sold recently. So, that's the process. But generally speaking, like I said, when we put our own comps in the house, even in like now I haven't run into a low appraisal in quite a while, but I'm not going to take any chances. I'm always going to put it in there. That just protects my buyer, protects the transaction really, because it's kind of silly to me when you have a transaction where maybe you have 10 or 15 people working on it between the buyer, the seller, the agents, the transaction coordinators, the title companies, the lenders, and it all comes down to one person's opinion of the value. It seems kind of arbitrary, especially when if you get 10 appraisers out to the same house, you're going to end up with 10 different values. So that's all it is somebody's opinion. It's somebody that's gone through a lot of training to develop that opinion. But at the end of the day, it's not like science. It's not like this is what that house is worth. It's more like this is my opinion of what this house is worth. So I like to eliminate as many variables out of a real estate transaction as I possibly can, which is why we put those comps in the house for the appraiser. So, and I should say this too, an appraisal from the time it's ordered until the time it comes back, it could be about 10 days. Generally, the way that it works is everything goes through an appraisal management company. So the lender, when they're ready to order the appraisal, will order it. They'll order it through an appraisal management company. That appraisal management company will assign the appraiser to come out to the house. So it's kind of like a double blind scenario. I know why they do it, because it eliminates fraud out of the system, because the lender doesn't know who's doing the appraisal. The appraiser doesn't know who ordered it. It just keeps everybody honest, which I think is the best way to do it, because there was a ton of fraud back in the bad old days pre-2008, and that's why they switched to this way. So I 100% agree doing it this way, but just this is kind of why it's a little bit cumbersome. So an appraiser will accept the appraisal, saying, all right, I'm going to do it, and from that point, they have generally 7 days to turn in their report. So there's about 10 days built in there. Ideally, we get it back faster, but not always. Sometimes we can put a rush on it, and we'll get it back in a couple days. But I think sometimes you have to pay extra for that. We don't want to abuse the system and always order things on a rush. So we want to build in plenty of time to get that back. But while you're gathering all your documentation, while the file's in underwriting over here, we got the appraiser over here doing their job too. So ideally, we come together with an appraisal that comes back at value. We've got the underwriter says we're good. All the documentation that the borrower provides is up to date and accurate. And then at that point, we have final approval. And at that point, we can go ahead and close. We've got a clear to close. And at that point, all we have to do is coordinate with the title company, get a time and day that works for everybody, and sign on the dotted line, and congratulations, you've either just refinanced your house and are saving a lot of money, or you've got your new home. Congratulations. So that's basically the entire mortgage process. And if that sounds complicated and like it's a lot of work, it is. We're averaging 12 days from start to finish. From, hey, I got a house under contract, to boom, I'm sitting at the closing table buying my home. That's with the lender partner that I'm working with for the most part now. Blindingly fast. Generally speaking, this whole process takes about 30 days. We're doing it in 12. So on average, so don't yell at me if it takes you 17 days. But I've had other working with buyers that we close faster than that. I mean, it's really it's awesome. It does a few things. It allows us to get into multiple offer situations and win simply because we're able to close so much faster than anybody else. I've had a couple deals this year where we weren't even the highest bid, but we could close so much faster. We've got such a strong track record of getting our clients to the closing table that they'll take less money in order to ensure that we can close on earlier. So just something to keep in mind that's pretty rare. Most of the time sellers like to see the money, but we can get it done. There is a potential to get it done quickly for less money than what somebody else is willing to pay for the same house. So again, if you have any questions whatsoever on this or anything else real estate related, you know how to get a hold of me. You can call or text anytime, 586-491-5622. You can also reach out at 248-561-6155. Or you can email me anytime, Werenka at simplyhome.com. My old email address is still going to be working forever. It's dwarenka at m1realty.net. And of course, I'm on all the socials too. So Instagram, Twitter, Facebook, LinkedIn, you name it, I'm on it. Shoot me a DM. I'll respond quick. Thank you so much for watching, guys. Rates are coming down. If you have bought a property anytime from the last 6 months to about the last 2 years, you're probably in a really good position to refinance. The reason why I say 6 months is you have to make 6 mortgage payments in order to be eligible to refi. So once you've made that 6th mortgage payment, if you want to think about getting a lower rate, now's the time. So give me a call. Happy to help you guys. Thank you so much for watching. We will be back in a week, and anything I can do for you guys, that's what I'm here for. We'll talk soon.